What's going on? Fabian for Liberty, Fabian Calvo. In this video, I want to basically give the next couple of years economic forecast that I've been talking about in my global economic reset work and also in interviews that I've done with people like Greg Hunter and others. Now, what I love about being on the record is that, a couple years from now, you can come back and look at this video and I could have been totally wrong and you could laugh at me and, it is what it is. But this is what I believe based on all of the work that I've researched, what my firm has researched as well. And, if you go back and you look at videos that I've been doing with Greg Hunter for the last couple of years, I think I've been pretty accurate with respect to the real estate market. And what's happened with the real estate market over the last couple of years, we've seen we've seen a manipulated increase in asset prices of close to 30%, as well as today we get word that Wells Fargo is now loosening their standards on jumbo loans as well. So the post-2014 midterm election, no money down loans are getting ready to really rear their ugly heads once again. And as I've explained in the few interviews I've done over the last couple of weeks, this time around it will look a little bit different than it did in 2006 and 2007, but it'll still have the same net effect, which will be people that will be able to borrow money to buy homes that they likely cannot afford if they were to lose their job or if there's another big downturn in the economy. But let's start off with, what I want to cover in this video is how the Fed is in essence purposely manipulating not just the money supply, not just the economy, but I believe they're literally thinking so many moves ahead like a great chess player, in that they're manipulating an overall economic chart or stock market chart to give the illusion that there's actually not only real economic growth, but that this is actually a bull market according to them. And so why don't we get started? So here we have the crash of 2008. Of course, was because of the lending practices on Wall Street, not just of subprime, how a lot of people often think. I often will hear neocons basically blame it on the subprime loans. Actually, credit-worthy borrowers, those loans were much larger. It was over $1 trillion, and as of last estimates, 50 to 60% of those defaulted. So that bubble was just equally as big, if not bigger, than the subprime loans. And then not to mention all the other fraud, waste, and abuse that was going on Wall Street as well. But what's happened between 2008 and 2014? We've seen a lot of unprecedented, new, unchartered monetary policies rolled out by not just the Federal Reserve, but central banks around the world. And of course, the first one is central banks around the world pumping in tens of trillions. Now we know just into the stock market, it's been 29 trillion. Now, I believe that number has been probably close to about 50 trillion plus. Collectively, that central banks have pumped in to the economy overall, to basically every sector. But we know that central banks pump in $29 trillion into the stock market globally, global equities, and we've seen stocks actually 30% higher than their 2008, 2009 crash. So they're 30% higher than that level, okay? Of course, we know the stock market recently hit an all-time high of 17,000. I still consider, I'm still sticking with my analysis that we'll likely see 19,000, 20,000 on the stock market, and I'll get into the reason why in this big next leg up here that we have. But we've also seen the real estate market up 29% increase. Now, when I was talking about that about 2.5 years ago, people were like, that's crazy talk. Well, since I started talking about it, real estate prices have gone up close to 30%, because here again, the big central banks are in the big mega banks that sit on the boards of these central banks are lending money to gigantic hedge funds at close to 0% interest rates, and they're going out and they're buying millions of homes that they're gobbling up, becoming the largest landlords in the world. Wall Street has been the largest landlord as well. But wait till they churn up the juice on the no money down loans. Now here's where it gets interesting. We had the stock market reach an all-time high last month, and then we see the market almost drop about 600 points from its high. Now, throughout here, what was going on? Well, what's going on there is Janet Yellen is continuing to talk about tapering and how basically they are going to keep rates at record lows. The federal funds rate is going to stay at record lows. But at some point, it's going to have to go up. And people are kind of freaked out that, hey, what happens if the Fed stops printing money? What is it going to do to this economy that has only increased because of the money printing. I mean, this is on record. It is so obvious to track that pretty much every sector of the economy that has any real growth has benefited immensely from the money printing that's come from central banks. So we could see a little bit of drop here. We've already seen a little bit of drop here. But remember, this drop is on the heels of the bogus 4% GDP growth, where they're claiming, oh, things are really getting better. But just a couple days ago, New York Times does an article that says, well, we don't really see where it's getting better because the major economic sectors are actually doing pretty horrible. Now, I want to just back up here because not only are we seeing record highs for the stock market, we are also seeing companies like Facebook and Uber getting valuations in the tens of billions of dollars. And that is reminiscent of the dot-com bubble, where we saw companies like Pets.com, which was earning zero money, have an incredibly ridiculous high valuation on what it was actually worth. But here's the deal. This part here is something that I've talked about if you've heard some of my other interviews in the past. This part here, from around where we're at now, or in the next couple of months, between now and I'd say midterm elections, until the next 12 to 24 months, as far back as 2016, end of 2016, beginning of 2017 actually, this is what I've come to call the end of the end of the road economic life cycle. And what do I mean by that? Well, we know that the $25 billion to at the peak close to $100 billion, actually it was over $120 billion based on my contacts and what they were telling me, with the money printing just from the Federal Reserve in America. The QE was unchartered monetary policy. But also central banks pumping in tens of trillion is unchartered monetary policy. And so the central bankers and the banksters on Wall Street and in London that are able to skim trillions of dollars on the top of this, off the top. So let's say they print 50, the central bankers might get 15 trillion of that. And they might use that to, actually it's probably much more than that because they pumped in 29 trillion alone into the stock market. But let's say they use 15 trillion. Well, they'll buy up stocks, they'll buy up real estate, they'll buy up artwork, they'll buy all kinds of stuff, and they'll create all of these asset bubbles, which we have now going on, the multi-bubble economy that I've talked about for some time. But I think between the next couple of months and the end of 2016, 2017, and a lot of people will be like, Fabian, there's no way it's going to keep up that, it's going to continue that long. And listen, I could be totally wrong on this. I think that time will prove me to be correct. But the point is that we'll see between now and the next couple of months and the end of 2017, we'll see this end of the road economic life cycle. And what does that mean? Well, that is characterized by absolute economic hubris. I believe the Fed will likely continue their quantitative easing measures, whether they do it openly or they do it through back channels like they did in November, where they basically laundered over $100 billion of debt purchases through the country of Belgium. We see that now they've been able to bully several European countries, including the French and the Germans, to sanction the Russians because they're likely trying to go after their banks and threatening them. Now listen, if you guys don't go along with this, we're going to have some serious ramifications for you and the dollars that you hold. That's a likely potential as well, because you get all these countries that I think are starting to realize that much of this is straight up economic insanity. But this takes us to the peak of this next mega bubble that I believe we're entering into, this next mega bubble here. And what does that mega bubble look like? Well, that mega bubble looks like stock market at 19, 20,000 plus points. It looks at real estate prices continuing to see double-digit growth. But what I find interesting is I think that the Federal Reserve knows this. They know that if they end tapering, they know that if they raise interest rates, the economy will collapse in the United States and the ramifications will be felt throughout the West. They know that. So instead what they're doing, because if you look at any real estate market or any stock market chart, for example, or any market, gold, whatever it may be, a healthy, if the market is doing this, just a straight vertical line upwards, we know that's pretty much going to panic investors. And we know that right around this time, a lot of investors and analysts were saying, hey, this is looking reminiscent of a bubble. But we know that a healthy economic growth looks something like this. Right? So it's going up and down, but it keeps going up and it has downs. So I think here where we have the Fed going on is literally they've thought this out so far in advance, where they are creating their own peaks and valleys, because if they just kept the money spigot open, it would just be a straight line up. So instead they're loosening it, they're tightening it, they're making economic policies, statements that they know will affect the market. So we see these drops go up and go down and what have you. So I think, ladies and gentlemen, when we get to this point, this is where I routinely talk about the global economic reset in the blood in the streets, if you will, the dollar crisis, multiple bubbles bursting. And I think that is at least my forecast for the next couple of years. Now, I want to just end this video with a couple of points. The first one is that I think, quite frankly, not only this here, but even more importantly, this here will be this right here is what's often referred to as the greatest buying opportunity ever, or the greatest transfer of wealth ever. That will be the greatest time period, I think, in our lifetime, in my lifetime for sure, of being able to create wealth. And it just depends what side of the fence you're on. And also, not only that, it also, in this period as well, this is why I love real estate, because going back, 30, 40 years, I've seen how central planners can affect real estate prices. And I see this hubris that takes place, not just in real estate prices, but in gold, in silver, in all kinds of financial markets. And this is what I love about this audience, is this audience are real free marketeers. And that is our tool against the globalist phony economic policies. Because I'll tell you what the central bankers are doing when they are buying up the stock market, buying up the real estate market, they're going to start selling right around here. Right around here at the peak is when they're going to start to unload. And not only is that going to make them trillions of dollars in profit, but more importantly, when the leg goes down, they're going to be able to consolidate power through government and through other agencies. And that's what this is ultimately about. It's the power and the control for them. Now, of course, a couple of black swans that could blow this up between now and then are some kind of staged or real terror attack. Of course, a pandemic, a larger regional war in the Middle East, which eventually will come, or in the Eastern European region by Ukraine. All of those are events that could happen. Those events, I think, will ultimately happen, but I think they'll likely all happen collectively around the end of this big boom, which is, again, when I say boom, ladies and gentlemen, it is a phony, fraudulent Ponzi scheme boom. All right? So anyways, I hope you enjoyed this video. I'm Fabian for Liberty. Remember, my new book on the global economic reset is on Amazon. The link is down below for you to order. Also, I wanted to just say, too, that I am putting out a 2-month webinar series on basically starting up your own online business, or whether it's on Amazon or whether it is basically an information type business or a business that you are passionate about. How do you launch that? And I'll be sending out an email to my email list at fabiancalvo.me and fabianforliberty.com today that breaks that down even more. I've already had a bunch of people register. I can only take 30 people for the interactive webinar series because I want to have one-on-one time with everybody. But anyways, I'll talk more about that via email today in the video that you'll be getting. I'm Fabian Calvo, Fabian for Liberty. Thanks for watching. I'm out.